How is your largest investment looking? Is it going up in value? Is it going down in value? It's the beginning of November. And you know what that means? We get to geek out on the October real estate numbers for the Denver metro area and find out what our biggest asset is doing when it comes to how much it's worth. So we're going to break down all of October's numbers, and the election is over, and it's officially the first day of winter here in Denver. We got our first big snowfall. Man, actually, it kind of came down quite a bit. We got about 6 inches in our house here and in South Denver. So I'm absolutely loving it right now. But there's a lot of headlines out there, lots of inventory. But the inventory out there isn't that good. And so good listings, priced well, still going fast, still appreciating in value, I believe, but I haven't looked at all the numbers yet. So let's just dig right into it, find out what's going on. We're going to start with where we always start, which is as far as supply and demand, which drives prices. Now, what we're looking at here is all the new listings, right? This is directly from the MLS. So all the stuff you're going to get from realtor.com and RE Colorado, that's going to be delayed by another 2 or 3 weeks. This is the legit information straight from the MLS that I get to see every single day. So new listings down. Now that's usually the trend this time of year. So we're looking at the past 3 years of data here. Okay. Each one of these spikes usually spikes up around May, June or so as being the peak, and then it trails off from there. Right. So not uncommon. The amount of new listings coming to the market is dropping. Where were we compared to last year though? So in October, we had a total of 7,200 new listings come on the market. Last year, we had 5,900. That's a 21, almost 22% increase year over year with the amount of new listings coming to the market. That's a lot. That's a lot percentagely. But active listings, right? Are these all just getting bought up, or are they sitting around? So active listings have dropped down to 18,000 from almost 20,000. So 10% drop month over month compared to last year. We're up. Let's take a look. October was 16,600. This year was 18,000, so up about 9%, okay, in active listings sitting on the market. Not nearly as big of an increase as the amount of new listings. So that is telling me there's likely more closed listings happening, but we'll find out here in a minute. Now, I will add on this that we are currently looking at all inventory, right? We're looking at single families, condos, and townhomes. And in the event that you're new here, my name is Alex Saldana. I've been a local agent here since 2010, helping buyers, sellers relocate around the Denver area. And if you have any questions, you can just reach out to me, just scan this QR code. You can get in touch with me, set up a few minutes to chat with me. I'd love to talk with you about the market and about what you're looking to do. Now, back on to the inventory numbers. So when we look at pending listings, right, this is going to tell us what's coming down the pike as far as how many closings we're going to have. But there's a caveat to this number that I'm going to show you in a second. So we can see from June, we had about 5,600, then 5,600, then 5,500, ticked up just a little bit to going under contract, 5,500 in October. So just a little bit, but we're kind of flat. Normally what happens at this time of year is we just fall off of a cliff, right? Down by 500 to 1,000 every month. To be flat over the last few months, there's a little bit of a different trend, right? So worth paying attention to. What does that say to me? That says to me that, despite higher interest rates, people aren't scared off right now. They're still having to make a move. Closings, are way down overall over the last few years. That's across the board nationwide. But this is telling me that the people that are moving have finally hit their breaking point. They need to sell, they need to buy, and it's kind of leveled off a little bit. I'll give you my predictions here on what I think is going to happen over the next 3 to 6 months. Whether I'm right or not, who knows? We'll find out. But I have a pretty decent track record with it. Closed listings, here we go. Okay, so just like I thought, closed listings are up month over month, but just by a few hundred, right? But compared to last year, where were we at? 4,800 closed, and this year 5,500. So that's a 13% increase in closed listings year over year. That's fairly significant. Once again, that goes back to active listings shooting up or active listings dropping and new listings shooting up, telling me that, hey, the stuff that's coming on the market is actually getting absorbed by the market. We're not continuing to build in active listings. But this is where I'm going to jump around here and show you what the kind of X factor is in all this. So active listings are dropping, new listings are ramping up a little bit. So what does that mean here? Well, when we look at a number that you don't typically see, withdrawn and expired, I look at this very closely, right? So in the last 30 days, the amount of properties to be withdrawn off the MLS is 1,233 down in your left hand corner. Okay. 1,233. If we have a total of how much inventory on the market? 18,000 just to be withdrawn, which means temporarily removed, still kind of for sale, but no showings or anything like that. Maybe they're doing some upgrades or something. That's 1,200. That's what, 7%, right? Of the entire market is withdrawn in the last 30 days. Let's look at expired. This means taken off the market. We didn't get our price. We fired our agent, whatever it is. This in the last 30 days is 2,500. So combined between withdrawn and expired, that is 3,700 properties removed from the market. Okay. Going back to active listings, we only dropped about 2,000, less than 2,000. So that actually says inventory is increasing and we're not selling all of these properties. They're just getting removed from the market. So they might come back up come this spring, right? March and April are the two best months to be a seller. Right now, if you're a buyer, now is the right time to be the buyer. So this is interesting. The number of withdrawn and expireds is crazy. Like that is a very high number. That is a lot of agents putting in a lot of work to try to sell a property, and they are not. That is a lot of sellers putting their house on the market, going through the pain of showings and things like that to not get what they want out of it. So we're going to keep an eye on that closely. Now, closed listings, we went over. They went up a little bit. Days in MLS. Here we go. Now we're looking at the median. Let's look at the average. Average days on the market is 47. Okay, so 6 weeks to be on the market before going under contract. Okay, people have that confused. When they go under contract, they are sold, right? You are not sold if you are under contract. Okay, what you are is under contract. And right now, about 25% of all deals are falling out of contract. Okay, so keep that in mind. Like, going under contract does not equal a payday. Okay, you have a long road to go through, inspections, appraisals, before you actually get to the closing table. So on the market, 6 weeks and typically another 30 days to close. So if you are on the sell side, expect 3 months before you can actually cash out and be on your way. Okay, keep that in mind. It catches a lot of people off guard. All right. Months supply. Now we did plummet down. We went from 3.8 down to 3.4 compared to last year in October. We were at 3.2, so a little bit higher. Nothing too crazy, up by 6% there. But again, we're plummeting in months supply because there's less stuff on the market now as buyers are absorbing our current inventory. Okay. Showings. Showings are up a little bit. Let's see the average showing. Yeah, we're up to 14 showings before going under contract. Okay. So if you are going on the market and you're considering what to do, as long as the property's been marketed properly, if you have had 14 showings and you have not had an offer, you're overpriced. Okay. Time to adjust the price downwards. Likewise, let's take a look at shows per listing. 4.4 per month. Okay. So you're going to have one, maybe two showings per week, depending on how you're priced, depending on the attractiveness of the property based on your market. Are you against a busy street, or are you in the middle of the neighborhood where everybody wants to be, right? Are you on the hill with any views, right? And that's going to be different than someone that's in a little bit of a valley that doesn't have any views, right? There's a lot to be considered right now. And buyers right now are being quite a bit pickier, right? As they should be. They're paying 7% interest rates right now. Interest rates have gone up like crazy over the last handful of weeks. And just to show you where they're at, let me see here. Here we go. So this is what's catching me off guard. This is a 3-month graph, and we're just going to pull up conforming loans. They were 6.4, 6.5, 6.5. Fed said, hey, we're going to be dropping rates. Dropped down all the way down to 6%. Now we're back up higher to 6.79 currently. Okay. We are almost, this is a 3-month map we're looking at right here. we're almost at a 6-month high, right? Like, so this is catching us off guard. The Fed lowered rates, but rates are going up. Why? That's a whole nother discussion. But basically, it boils down to people thinking the Fed didn't need to do 50 basis points. Like, what's going on? So just a little bit of an interesting thing happening there. So where does that leave us to our closed price? What you all want to know is your home going up in value or down in value? We had an anomaly in October. It went up. We went from 560 to 575, what, $15,000, right? In value, up a percentage or so, compared to last year where we are up from what, 556. We are officially up 3.4% year over year on pricing. Like, this is not normal. Like, if I pull this map out and we can see the trend here, right? May, June is always the peak of closings for people putting their house on the market in March and April. And then it just trails down, trails down. Oh, in 2018, we had a little bit of a bump up by 1%. And then it just trails down until January. Same thing with 2019. Boom, trailed down. 2021, June was the peak, trailed down. 2022, April was the peak, and we had a big old flush down there. Last year, or 2 years ago, last year, it was June was the peak, and then it just trailed down to December, right into January. So we did have quite a bit of a tick up. Why? I don't know. Did the lower interest rates help because those bottomed in the middle of September? So the closings happened in October, and people took advantage of that. Probably lines up pretty good. So will I expect raising prices in November, December, and January? Nope, not at all. I would not bank on that whatsoever. But it is something to pay attention to because it is a little out of the ordinary. Now, this is for all property types. What if we were to break down the difference between single family condos and townhouses? So for single families, that we had a bump from 600 up to 615. That's where the bulk of transactions are going to happen. Okay. Condos, we actually dropped a little bit. We went from 360, but we spiked up from August of 350 up to 360 in September, and then we dropped down just a few $1,000. Not a real notable drop in October for condos. Townhouses, we just don't have a whole lot of them here. They are on your typical trend of going down until the end of winter. Okay. So there you have it. Now, what's happening? A little bit bigger picture. So I like to look at Redfin for their data and information. They have a lot of great stuff out there. So new listings we can see dropping as they typically do, very even with the last 2 years. 2023, 2022, we're kind of right there. Okay. Pending sales, let's see, dropping a little bit, keeping up with the winter trend. But we're still right there for 2022, 2023. Homes sold, we're right there with 2023, bit lower than 2022. Median sales price, we ticked up over the last few weeks. Okay. So nationwide, we are up 5% year over year across the nation for housing, right? Even with these higher interest rates and everybody saying the market's going to crash and do all this stuff, there's no inventory for sale. I know we have 20% more inventory than we did last year, but last year we had like record low inventory numbers. So percentagely, it's not that much. And just to show you like what I mean by that, okay, let's look at active listings. Okay, we're up. Let's pull all property types, 18,000. Okay, let's zoom out to 5 years. Okay, it's the highest we've had in 5 years in October. Let's pull out the max. So the last time we had this much inventory was all the way back in like 2013-ish. Okay, so that was a long time ago. But the last 10 years, we have had a hyper market going up by 6+% every single year, which is not the norm. I mean, I guess our norm in Denver here is 6% over like a 100-year time frame. Okay. But nationwide, that is not the trend. We had lots of years where we were up 10, 15% in our Denver market year over year in the last decade. That's not normal. So we're just kind of getting back to this little normalization a little bit, which has actually been nice. You don't have to jump on a property within the first, 4 hours of it being online in order to have a chance to get it. So nationwide, we are up a little bit in price. Active listings, let's see here. We dropped a little bit. We're still up 15% year over year nationwide for the amount of active inventory. This one's always my favorite. Price drops. Price drops are on the rise. They always are. 6.5% of everything on the market last week had a price drop on it. So, I mean, 1 out of 15 properties had a price drop last week alone, not the last month, last week. Age of inventory, it's higher. Age of inventory is 59 days, so 2 months on the market on average. Month supply is creeping up there, 16.5 weeks supply. So that is over 4 months. That is considered a balanced market in the entire US. Okay. So where do we go from here? What in the world is going to happen? Well, first of all, if you have any questions, you've also got my cell phone number right down there. Boop. You can call me. You can text me anytime. Just reach out. I'd be happy to chat with you about whatever you got going on. And where do we go from here, right? Trump has been announced as the president, and the stock market is up. There's a little euphoria going on with half the population, right, as there always is, and the other half is not happy about it. What's going to go on from here? Well, we saw a big spike this morning in the 10-year yield. So, what I've heard from one of my mentors is that there's a good chance that rate drops are off the table, okay? Because the market is strong enough to withstand our current rates for a little bit longer. Whether or not that happens, I don't know. The Fed doesn't know what they're going to do in the next 30 days, let alone the next 3 to 6 months, okay? So I would suspect interest rates stay hovering for a little longer than what we've been thinking as far as 2 more 25 basis points by the end of this year and then 4 in next year, right? So we will see what happens there. I think Trump is going to push the narrative of he's going to get rates to drop. And so I think, and then that might happen, but it might take a little bit longer than we think. It might push us into the middle of next year or something. But I think what's going to happen is that with our limited inventory, the election is over and people want to get on with life. They're just going to make their decision now, move where they want to move to Canada, you move to Norway, whatever. And I say that jokingly, right? Kind of cheeky because of all the memes out there. And I think it's going to increase the activity level on both sides. People that need to downsize are going to downsize knowing, hey, this is what we're in. We got to suck it up with the current interest rates and finally make the move, right? I think people who need to move up are finally going to go, okay, the election's over. We know what environment we're in now, and we can finally make the move. So I am expecting a busy spring. When does that begin? It usually begins middle end of February where activity starts picking up, right? I think it might start a little bit sooner this year, right? I think it's going to start more now with everybody who has delayed, and maybe it's only 5% of the market, right? 10% of the market who's like, oh, I'm just going to wait till this election is over before we make a move. Well, 5 to 10% more buyers in the market would be a drastic change in the overall market. So I think if you are on the buy side, I think there still is an opportunity to get a good deal right now, right? Where if you buy now, come March and April, you're going to be up by 10% in value just because of the seasonality, right? And I think from there, we have slow appreciation over the next few years, honestly. So the next 3 to 6 months, I think we see some more activity, especially in more hyper markets like we have here in Denver. I think nationwide, we just see a slow, steady creep and crawl. Now, nationwide, we're actually doing really well numbers wise. I'm actually kind of surprised, but I think this just has to do with people moving from more expensive areas to less expensive areas and driving up the prices in Iowa, Minnesota, Wisconsin. Chicago is up like 8 or 9%. Like they've been in a declining population for the last 30 years, for crying out loud. And their prices are going up. Like, what in the heck is going on? So people are moving from more expensive areas, i.e. Denver, right, back home to the Midwest. I mean, 80% of us are transplants here, right? And a lot of us are from the Midwest, including myself. So they're moving back home to be with family. They have kids now, whatever it is, and they're driving the prices up there with the equity that they've gained in a more expensive market. People from San Francisco are moving to Colorado because we're half the price of Colorado. People from Colorado are moving to Texas, to Florida, to Arizona, all these cheaper markets and driving up the prices there. So I think nationwide, that's how we're seeing such a big increase is in the migration from more expensive places to more cheaper places, right? More inexpensive places. So over the next few years, I do think we're just going to kind of float at 2 to 4% up. Denver, I think we're in that range. I don't think we see hyper numbers for a little bit unless something drastically changes and rates do get down to 4% again. Then I think we see crazy 5-10% over asking price scenario once again. So if you need me and you want to talk, scan this QR code, reach out to me. You can get on my weekly newsletter too, keep up to date on what's going on in the market. And until the next time, happy housing.